All right, let's get right into it. Today, we're going to do a little detective work. Think of this as a case file, and our subject is a stock with the ticker DRCT. The evidence? A technical analysis report. We're going to follow the data trail and piece together the pretty dramatic story this stock has to tell. Every good story has to start somewhere, and for this one, we're starting at the top, the absolute peak, $6.59. That was the high point for this stock over the past year. Just kind of burn that number in your memory, because it's where our whole investigation kicks off. And from that peak, well, here's where we are today, just under 12 cents. Yeah, the contrast couldn't be more stark, could it? It tells you everything you need to know about the scale of this journey. We've gone from the mountaintop right into a very, very deep valley. I mean, do the math. That is a staggering 98% drop. So the central question for us, for our investigation, is simple. What on earth happened? What clues can the cold, hard data tell us about this absolute freefall? Well, let's start digging. Okay, first things first. Like any good detective, you've got to establish the basic facts of the case. In the world of technical analysis, that means figuring out the dominant trend. Is the stock heading up? Is it heading down? Or is it just kind of going nowhere? This is our starting point. To find that trend, we use a tool called moving averages. Now, it sounds kind of technical, but the idea is really simple. Imagine the daily stock price is like a super jittery puppy running all over the place. The moving average is just a smooth line that shows the general direction that puppy is heading. It cuts through all the daily noise so we can see what's really going on. And check this out. The evidence here is just crystal clear. Our current price, around 12 cents, is already below its recent 10-day average. But then, look at the gap. It is way below the 50-day average of almost 29 cents, and it's not even in the same zip code as the long-term 200-day average of over 53 cents. The further back you look, the uglier the picture gets. So here's the bottom line, the first major takeaway. This isn't just a small dip. The price is underneath every single one of its important historical averages. This is our first and probably most powerful clue. The dominant trend is, without a doubt, down. And if you needed any more proof, here it is. This is another tool, the Arun indicator. Just look at the two scores. The Arun down is at 96. The Arun up is way down at 56. That Arun down score is basically a measure of how strong and how recent the downtrend is. And at 96 out of 100, the indicator is practically screaming at us that the bears are in total control right now. So we've established the direction down. Now let's move to part 2 of our investigation and see what else we can find. We need to figure out the force behind this move. You know, the momentum. How fast is this thing falling? Is it picking up speed, or is it maybe, just maybe, starting to slow down? For this, our next tool is the Relative Strength Index, or RSI. I like to think of it like a tachometer in your car. If the RSI gets above 70, the engine is revving way too high with buying. We call that overbought. And if it drops below 30, it's like the engine is sputtering and running out of gas. We call that oversold. So what's the reading on DRCT's tachometer right now? According to the report, it's sitting at 29.76. So yep, that puts it right in that sputtering oversold territory. Now, this is a really interesting clue. A reading this low can suggest that the selling pressure is just getting exhausted, that maybe everyone who wanted to sell has already sold. Now, I gotta be clear, this is no guarantee of a reversal, but it is the first real hint we've seen that the downward momentum might be running out of fuel. But hey, let's not get ahead of ourselves. Here's another momentum indicator, the MACD, and it's throwing some cold water on that idea. You can see here it's deeply negative, and it's trading below its own signal line. Both of those are strong signals that the bearish momentum is still very much in charge. So even if the brakes are getting tapped a little, this car is still rolling downhill, and fast. Okay, this brings us to the final, and maybe the most dramatic, piece of evidence in our whole case file. We're going to look at trading volume. This isn't just about price anymore. This is about participation. It tells us just how many people were involved in this story. Just look at this chart. On the days before, you see trading around 9.5, 11 million shares. Pretty normal. And then on December 1st, an absolute explosion. Over 315 million shares changed hands. That's not just a spike, that's like a skyscraper suddenly appearing in a quiet neighborhood. This is a massive, story-defining event. And to put a number on it, the relative volume that day was over 24 times the recent average. 24 times. That is just an extraordinary amount of activity. Something happened that day that pushed a massive number of investors to act all at once. So, what does a clue like this mean for our case? Well, this is the climax of the story. In the world of analysis, this is called capitulation. It's a fancy word for that moment of maximum panic, when it feels like everyone who wanted to sell finally threw in the towel and hit the button. It's a potential sign of a washout, where all the selling pressure exhausts itself in one giant final burst. All right, so we've examined all the major pieces of evidence. We've looked at the trend, we've looked at the momentum, and now we've seen this incredible volume. It's time to step back, put all these clues together, and see what final verdict the data gives us. So here's our summary. First, the trend is severely down, no question about it. Second, the downward momentum is strong, but our RSI indicator is flashing that oversold signal, which is a potential sign of exhaustion. And third, we just witnessed a massive capitulation-style surge in selling volume. So after all of that, what's the report's final score? Get this, 62.5. Now, on the 0 to 100 scale this report uses, anything below 50 is bearish and anything above is bullish. And this is the twist in our story. After looking at a 98% drop, the report's final score is actually in bullish territory. It suggests the model is weighing those oversold conditions and that climactic volume very, very heavily, hinting that a change might be possible. And that leaves us with our final open-ended question. With a score like 62.5, does this data suggest the worst is finally over? Or is this massive volume spike and oversold reading just a dramatic pause in a much longer storm? The data gives us the clues, but as always, the final chapter of this story is the one that has yet to be written.